Well, thank you guys for joining us today for Sound Stewardship's webinar on property and casualty insurance. Today, I have the pleasure of speaking with Roper DeGarmo. He has been helping clients find appropriate insurance coverage in the property and casualty space for years. After working for years in a large insurance agency, he started his own insurance agency in 2004. It's Signature Personal Insurance. Roper provides insurance solutions for real estate, rare assets, automobiles, and other unique needs. Roper, thank you so much for taking some time out of your day to have a fun and lively discussion around property and casualty insurance, which
Yeah.
I know with the hurricane and all that going on, insurance is probably on a lot of people's minds right now across the U.S. So it's a very timely discussion here. So thank you.
Yeah, I'm excited to talk about insurance rather than a particular issue on a particular policy.
Right.
I
Yes.
just step out a little bit and remind myself that it's a bigger puzzle than the one issue I have to deal at a time.
Right. Right. So I know you've been doing this for a long time and you specialize in private client work,
Mhm.
but can you talk through kind of how a typical insurance review process goes? What are things you look at? I know the insurance market is a hard market now, so that might make the insurance review process a little different now. So can you kind of speak into that some?
Yeah. So the hard market is what everybody wants to and probably needs to talk about. Things that were true 18 months ago,
Yeah.
advice that I gave 18 months ago might actually literally be different today.
Yeah.
And that's in some nuanced ways with what we do, but it's a real deal. And just for those who aren't familiar with the term hard market, what it really means is there's upward pressure on pricing, which we can all see. The one that's a little more hidden because it just gets certain people is the pressure that restricts availability. So
Mhm.
I have seen so many more homes go uninsured in the last 18 months than in the last 20 years by far.
Yeah.
It was maybe just over 2 years ago I saw the first time I saw a home that was uninsurable, period.
Wow.
And so that's not most of the Midwest. There's very little of that, but it's important to know that that's happening, and to kind of be aware. So your initial kind of question was maybe not exactly what's the difference, but like how does private client work, middle market work, and standard insurance.
Mhm.
Of course that's where I started, and I started just doing regular home and auto, and one day in probably 2002 I did a larger home and a medium-sized home at the same time, and did the math that the commission was a little bit more on the larger home and it was a little easier to do. So I just kept doing that over the last 20 years. But for any homeowner, the process of that you should go through is very similar, regardless of the value of your home. And it really involves, taking the time to find a trusted advisor,
Mhm.
somebody that you can be completely transparent with, and you can let them see inside everything that you have and give you some advice. But really, and then you want to feel like you can make an informed decision. I really don't think it's a great idea to just trust someone else to make the decisions for you. You need to take the time to understand what decisions are being made and why.
Yeah. Yeah, no, that's good because there's a lot of things underlying on those policies, and so some things you can add and subtract, and if you're not in that space, you really need someone there to guide you through that and say, hey, this is worth it for what asset level you're at or the area of the country you're living in. Like you should really consider that. So it's good to have that kind of pro in your corner there. Um, and so, what are some maybe common misconceptions people have around property and casualty insurance?
It's related to you made me think of by talking about all the provisions inside of the contracts. I think one of the most common misconceptions is that some kind of logical thing that I can do could save me money that the insurance company couldn't figure out or think of. And I would just always lay it out there that's like the insurance company is like Vegas, that they wrote all the rules, it's their contracts, they have all the power. So if you think you found an angle, it's probably because you don't know how the game is actually played. So that is that is all levels of the market. Doesn't matter how wealthy or how new to home ownership you are.
Mhm.
Thinking you found an angle on an insurance company is just a bad place to start. So um, those kind of misconceptions are all over the place. But other than that, the biggest one that I spend most of my time talking about is the difference between market value. So
Mhm.
you bought your home, you found a willing buyer and a willing seller, and you create a market value versus the cost to actually rebuild your home. And that can vary wildly. The Some of the homes in Midtown Kansas City, Missouri from the 1910s been restored and they're beautiful, but they're almost impossible to rebuild because they're construction techniques that we can barely do anymore and maybe wouldn't want to.
Yeah.
And so you can often have a rebuild cost that is dramatically more than the market value, and vice versa. You could have in a high demand area, you could buy a house that really what you're paying is for the access to live on that street in that neighborhood near that lake, and the cost to rebuild your home maybe is less. So market value versus home reconstruction cost is really hard to keep straight. But if you can keep that, I've started throwing in the middle assessed value by the county because we all know that it's supposed to be our market value, but we can sort of juke it a little bit and keep it out of there.
Yeah.
And so I think if you can remind yourself that the home has multiple values, depending on what your motive is,
Hmm.
it can help get your mind around it.
Yeah. Yeah, no, that's helpful there. I think we have a question that came through here. Oh, yes, yeah. So yeah, one of the attendees said triple stack brick is super expensive if we try to do that now. So yeah, so
Well, and
1890, yeah. So that is something to consider as you're looking for homes and whatnot. Of
And because we'll say the term maybe 20 times, because of the hard market, if you're looking at a home, particularly on a coast or near a forest or near a lake, find out how much it's going to cost you to insure it. I can't tell you how many times I've had clients show up with great deals on homes
yeah,
that are extremely difficult to insure. And so whatever savings you get up on the upfront is eaten away as you
yeah.
pay out on your insurance over time.
Yeah, and so that's a reminds me. So, is someone looking in the looking to relocate? Is Are they working with you to say, "Hey, here's the address. Here's what I'm looking for. What are rates at?" Or is it, "Hey, I'm asking the sellers for, hey, what have you guys been paying? How's that go about?"
Yeah, so it's one of the benefits that we offer. So my firm, because we started in Kansas City, and I just followed my clients wherever they needed me to go. So I've been writing in Florida since 2001.
Okay.
I absurdly, a kid from Kansas, know way more about Miami-Dade wind certification construction than I didn't know it existed, right? So
Yeah.
um, the key is to find somebody who understands that it doesn't require a local broker, but it does require somebody who understands the market. And so if your local agent says, I don't really know anything about it, you take their word for it, and they should be able to help you find somebody who can.
Yeah.
So yeah, I would say that's the process. To just don't get the other misconception is you can check the current homeowner's insurance, but that's not really available to you just because that's what it's priced at. It might be somebody who's had it for 10 years and that insurance company's been trying to get off of it for 10 years. And as soon as they sell the house, they're going to throw a little party and walk away because they're
Okay.
not going to do it again. So
Yeah.
all of that plays into it. But those are things that if you can find a property casualty professional to talk to you about, they don't have to do anything except for just kind of make sure you're not walking into misconceptions.
Yeah. Yeah. That's helpful. Yeah, I know. Uh, that's not something I had on my radar for our first home purchase, but the second home purchase definitely, like, hey, because those are all real costs. We're not just looking at the home price. There's other things that tie into this, and
Yeah.
taking those into account is super important.
Lifetime cost of ownership, right?
Yes, yeah, yeah, definitely, definitely. Um, so what would you say? So what is important for clients to learn or understand from an insurance review? What are some things that are helpful for them to be looking for and know about?
Um, so I think one of the things that I would encourage all of your clients to pick, well, first of all, find somebody you trust.
Hmm.
The market is so hard right now, and I have undoubtedly offended more than a few people in the last few months as they come to me to start the buying process that they're very familiar with for 25 years. And I don't have a very good way of saying this, which is I've promised my team we will not even start until we have all of your policies. And if you need to redact the premiums, then we probably need to find another professional because if you don't want to tell me what you're paying, you're just starting off on a non-trusting relationship. I don't control the cost anyway, but I've just had to express to all my clients,
Mhm.
look, I can't, if I could sell it to you for half price, of course I would do that because I would win the business 100% of the time.
Right.
So what I encourage everyone to think about is we need to start shifting our minds about how we go to market for insurance.
Okay.
Probably 25 years ago, if you found the right insurance broker or agent, he might have a little bit of pull with a particular underwriter to be able to get you something that you otherwise couldn't. But today, most underwriters have no authority. They can't change anything. It's just
Okay.
they take all the data, they put it in, and so anything you hold back is only hurting you. And so I guess that would what you would want to as you're going into an insurance review, if you find somebody you can trust, you can be completely transparent for them. Make sure you get as much detail to them as possible, and it'll just make the process so much more smooth for everybody.
Yeah. A question just came through here. So for someone who recently purchased a home that they're going to flip, so it's not really worth a whole lot right now, but they're hoping to add some value, sweat equity into it. Um, you being on the insurance side, how should that person think about insuring that property? And what are some, hey, look at these carriers do flip homes well. I don't know if there's a carrier out there. There might not be, but how should a person in flipping homes be thinking about insurance?
So what pops into my mind again is just the Vegas rule. Just understand you need to make sure that they know what you're doing. The num You can seemingly get away with a lot of things by saying, I'm going to be living here, or I'm going to do this, or I'm going to do that. But unless you're willing to either sit down yourself and read the entire contract and find out what happens after the damage, after the fire, because they're going to come and reread that whole contract and look at what you told them was happening there and what wasn't. And that's when they decide if they pay for a claim. So with that in mind, a house that you're going to gut and flip, um, it's a much different conversation about how comprehensive you need the coverage to be because most of what's standing there is going to be in a dumpster within the next 3 months anyway. So you should I won't get into like the details. There are dwelling fire policies, which just basically means a bare bones policy that provides you as important as anything, the liability so that if someone wanders onto your property and is hurt, you want to pay attention to that. But again, I would say you need to be able to be transparent with who you're working with about what you're doing and follow along in a way that you can understand so that you don't get led astray.
Yeah.
For better or worse, my industry is full of people who really do want the commission. And if they don't have the product, they sometimes will say, we'll just do it this way. We'll just say you're living there and it won't be a problem. It won't be a problem for them, but you want to make sure you're on the up and up with the companies.
Yeah. Yeah. I know trying to, yeah, people will try to fit a square peg in a round hole more often than not when you're dealing with some others there. So another question came through, and this is for people that are not living in the Midwest. So I think, yeah, the question's from someone who's living in an extremely high insurance rate state. So like somewhere on the coast. How should a person living in the high insurance rate areas, how should they approach the level, what level of insurance is worth the cost?
Mhm.
How should they be thinking about that?
Well, let's go all the way. Let's go all the way and say that there's if you could afford the risk, the most popular thing for many of my clients in high risk places is if they could just buy a $1 million policy on a $10 million house, because that's all they're worried about is those small claims. And a principle of insurance is that's creates an adverse selection against the carriers. And so you don't actually, in any policy, get to determine for yourself how much you want to buy. The oh yeah, without exception, and on homeowners policies, the contract is going to require that you carry at least 80% of the home's reconstruction cost to be determined after the fire. So, like, it doesn't matter what you tell them, they're going to come
Yeah.
and look at it. So, that question, I'm maybe hearing my clients in, but I assume that's what's being asked is that it would be great to buy a beautiful house on the beach in Florida and only buy half the insurance that you need. But if you do that, the insurance company not only only has to pay half of the reconstruction cost, they get to pay half of any claim. So it's called a co-insurance penalty. And so the reason they'll allow it to happen is you're paying for $1 million of coverage, but they'll never pay more than 500,000. So that little provision is one of those Vegas-like odds things that allows things to get sideways real fast.
Yeah. Yeah. That is yeah, that no, that's good. I makes sense. And I hadn't really been thinking of insurance of like, hey, the house wins. Yeah, I mean, I when you say it, I'm like, yeah, that does make sense. But that's a good analogy there of like they've accounted for everything, and those contracts are robust and they know what they're doing. So
Yeah.
um, yeah, and it's not a sense of like trying to get one over on them. It's just, hey, how do I make this more economical and the from the premium side of things when it is a hard market and things are expensive across the board and
Well,
it's
it's really challenging because each policy type can have a little bit different understanding of what you're allowed to do. And I think we all can understand life insurance, right? Like we understand that if you buy a life insurance policy, you just pick your limit. How much it's only going to happen one time. We know what the event is. It will be very clear if it happened or not. So life insurance makes it clear. On a home, because we go back, there's these multiple values, the market value, assessed value, the reconstruction value. It starts to feel a little more nebulous as to how much insurance you should buy. But I'll just say it again. It's not really up to you. There's some clause that determines, and it points back to something. It's going to be based on an inspection that happens either before the claim or after the claim. So we try to work with carriers who do it before the claim.
yeah. Yeah, no, that's good. So we talked about the hard market, hard insurance market. Um, do you foresee when that market's going to shift? Where's your crystal ball at,
Oh
Roper?
yeah.
But
I um I was more optimistic last year at this time than I
okay.
am now. So the hard market again is upward pressure on prices and a pressure on availability of insurance. So it's a constraining of availability. And that is getting not better, but worse. So um, the pressures on the insurance companies are mostly, well, regulators. So they all have to go to each state, and
Yeah.
they, if XYZ insurance company wants to take a rate increase, they have to go to the insurance commissioner's office and say, may I have a rate increase of 15%? And the insurance company commissioner can say yes or no. But what happens then is that XYZ insurance company goes to their insurance called a reinsurance company, and they say the reinsurance company comes in and says, we're taking a 30% rate increase, and there's no regulation. So they just charge market rates. And so as the cost of reinsurance has gone up, the insurance companies that all of us buy from
Mm-hmm.
they're getting pressure for above and they're passing it on to us. So I
Mm.
don't foresee that changing anytime soon. We're getting, we all know about wildfires. It's extremely expensive and catastrophic when it happens. Believe it or not, currently hurricane isn't that big of a problem for the insurance that
Oh,
they've baked that in. So
yeah.
it is more expensive on the coast. So they're working at that. It's Florida is the state as a whole has a pool that's got a little bit like they probably have way more risk than they should. But anyway, the the thing that is going to continue to make the hard market hard is hail claims on our roofs because convective storms, which is just that storm that bubbles up and it throws hail and wind, that those are increasing in frequency and intensity, and they don't cause, billions of dollars of damage in any one storm, but they happen, in the spring. We watch them come every night, and if you once you stop and think about what's happening, you could watch this little money ball roll across the plains and picking up money from the
Yeah.
insurance companies. So I don't foresee that changing anytime soon. And the complexity of our homes, used to be we would all get together and we'd design it, and you'd stack your bathrooms on top of each other, and your kitchen would be as close by as possible. But today we want them to be unique and convenient. So we pull water lines through every wall in every part of the house. And it just means that when they fail, you can't see them, which, by the way, we maybe should come back to that. Automatic water shutoff valves. They're coming. They'll be
Yeah.
code in probably 5 years, but if you don't have one, think about an automatic water shutoff valve. And anyway, so that's what's pressuring the insurance market. I don't see it changing anytime soon.
Yeah. Huh. Okay. And you talked about roofs and hail damage, and I know for Midwest, that's probably one of our bigger risks, or whatever. It's not, the flooding from a hurricane or the wildfires or whatnot, but it's the hail damage with the roof. And so, for someone living in the Midwest, like, how do we think about, oh, do I make a claim on this roof, or do I try to just self-insure? Like, who
Yeah,
like, do you help with that, making that call with
I do
someone, or?
not. Here's
Okay.
what I do. I mean, here's the reality is this, determining when a roof should be replaced is probably more art than science.
Yeah.
You can certainly find I mean, I've seen them when the baseball size makes it very obvious that that roof has been damaged, but you can have a lot of damage from, little invisible hits.
Yeah.
But what I would say is this, like, just be cautious about it, that as the storm goes by, there are national roofing companies that literally have people stationed ready to go, and the next day they just follow the storm pattern, and they have maps that tell them where did it hail and where did it not, and they'll go door to door, and it is true in some cases. They're like, hey, we can do the inspection, we can file the claim, we can do the whole process for you. Many times they'll do that, and then the insurance company adjuster will come out and say, you have filed a claim. We have found $150 worth of damage. Your deductible is $1,000, $2,500, or $5,000. So it's below your deductible, so we're not paying anything, but you now have a claim on your record,
Oh.
which it says zero next to it, which is nice. But when the computer comes back and looks at claims frequency and severity, so how many claims do you have and how much was paid out, a zero is still one claim. So it still matters. And the reality is, you can say it's, act of God and shouldn't impact you and all this other stuff, but I've been doing it long enough to know that there's still a human element in these decisions about what matters and what doesn't, and any claim matters.
Yeah. Yeah. And so, be cautious when the door knockers are coming and saying, hey, we can do all this for you. And maybe
Find a trusted roofer. That's what
yeah.
I tell my clients all over the country. I'm like, great, that person has told you that you have damage. It's not a problem. Nothing has changed. You have that information. Now you go find a roofer that you trust to get up there with you and give you an honest evaluation as to the condition of your roof.
Yeah.
And I still have clients that do the fishing expeditions to try to see, like, they know they have to replace their roof. It might have been a 25-year-old roof, and they've just been waiting for the storm, and they're hoping that they can get it. And I get it, like, and there's no judgment in me on that, but I just think that it's wise for us to think about, in a hard market, what signal you're sending to an insurance company. As I said to you before we got on the call, if it feels like the insurance companies are just looking for a reason to cancel you,
Mhm.
that is literally what is happening. They are auditing their books, looking for clients that meet some requirement that the state would allow for them to cancel.
Mm,
Because again, they're paying more to their insurance companies than they're collecting from their consumers. And if they can just get out of it for a little while, they're happy to do so because they'll come back when they think the market's better.
yeah. Um, well, how long would you say we've been in this hard market? Like when did things shift to this?
Um, Almost 2 years, but it really started to heat up probably. It's been 18 months of just constant change and
Mm,
shifting. Um, and I'm not sure I could tell you what kicked it off. Ian didn't help. Hurricane Ian um, did. So I tell you they have it baked in, but there were, you know, fleets of vehicles that were in the path of Ian that were not insured in Florida. So the insurance companies had policies that were from all over the country that they had driven down there. The coverage is good. They still have to pay the claim, but they were really surprised at how much their auto insurance took a hit during Ian. I mean, that's just, and maybe the reason the industry talks about it is that's what we weren't priced for, right? They
yeah.
weren't expecting those.
Mhm.
The houses on the coast in Florida, we know what the probability of them getting damaged is.
Yeah. Yeah. Good. So when we think about homeowners insurance and kind of, the just a default standard homeowners policy, someone who's living in the KC area, Midwest KC, what are some standard things that you hope to see on there? And what are some maybe add-ons that should be considered that you don't see as often as you'd like?
Um, that's an interesting question. So I looked for a couple of things. One, we'll go right back to that home value, the insured value. And you want to pay attention to what you think the actual cost to rebuild the home would be and today's market. Now, there was a short period right after, as we came out of COVID, where the cost to rebuild had spiked so much that
Mm-hmm.
it maybe didn't make sense you weren't going to try to catch up with it. But with inflation, the cost of material and labors has gone up. So be aware that there is going to be a calculation after the claim to make sure so that's number one. Number two, the place where there's the most surprise is a limitation of backup of sewer and drain. The insurance carriers all figured out a very long time ago that if you fill a finished basement with sewage, it is it is extremely expensive to replace,
Yeah.
to clean up and replace. So look for backup of sewer and drain coverage on your policy. The trick there is if you don't see it, it doesn't mean that you don't have it. The broader policies that we sell don't list it because it's just covered. It's just in there. So if you see backup of sewer and drains on your policy or on your quote, think of it as a limitation, not an addition. They're
Oh,
usually just saying this is all we're going to pay because it's very hard for an insurance company to say we're not going to pay anything. But if they offer you something and say we'll pay this much and you accept it, the courts generally back that up. So backup of sewer and drain is really big. Um, and that we're starting to see more and more just limitation for internal water leaks. So I we're seeing trade-offs in high risk areas where the carriers will come in and they'll offer reasonable coverage for hurricane coverage or wildfire, but they'll just remove all of the water damage. So you're on the hook if any water line breaks, which is an interesting technique because that's much more likely to happen, the broken water line. But so pay attention to those things. And again, take some time to think about a flow-based automatic water shutoff valve. I personally use Moen. It's not anything fancy, but it's called Flow by Moen. And it just monitors the movement of water through your system. And if it detects anything that seems like a leak, it just alerts you. And you can decide, no, that's fine. It's me. I'm going to leave it on. Or you can let it shut off and make sure that you don't have any damage. And they're very affordable. They will be, my advice to all your listeners would be go out and find out how much it will cost you to put it in as soon as you can. You can decide whether you want to do it or not, but you very likely will be required to add it at some time in the next probably 5 to 10 years.
okay. And that alert, like is it synced up to your phone? Like it's like a
Yeah.
little, okay.
Yeah, so my example, I mean, I had like the perfect test. My wife and I were in DC last summer, and my phone says it looks like you have an abnormal use of water for this time of day. And I call my son, he's like, no, we're good. And about 15 minutes later, I'm like, it's saying it again. Can you go double check and just look? And he called back about 20 minutes later and said the hose in the backyard had sprung a leak, and it was just had a jet of water shooting up into the yard. And so the computer was watching this small amount of water run through my water main for 20, 30, 40 minutes. And it says, this doesn't make any sense. Like this is the telltale sign of a leak, and it alerted me. So I got to test it by watering my grass just a little
Yeah. Whew. Low risk trial there.
That's right.
We like those. Yeah, that is great. Yeah, it's obviously going to help with the water bill, but then any kind of insurance
So
headaches, like
and it take your time, and you may not remember this term, but flow-based matters. It matters a ton. There's lots of systems where you can put a sensor underneath your sink, and it'll like have a little robot that turns your water off for you if you drip it right on it, and that's
mhm.
great. But the insurance companies only care about the leaks behind the wall. You're likely to find the leak under your sink in time for it not to cause massive damage. The one that is in your wall that has to fill up the cavity inside the wall before you see it is what they're worried about. So
Yeah.
if the system doesn't monitor the movement of water through your water main, um, just be very skeptical as to whether it's going to qualify for any discounts or even eligibility.
Mhm. Yeah, no, that is good. I'm gonna have to look that up here after we're done here today. Um, a question came through. So the personal umbrella policy increased with the purchase of an additional vehicle and a new rental property. And so they're just curious like why this is the case when they have separate insurance for the vehicle and the property. Why is everything kind of increasing there for
A
them?
great question. I- whether or not it's always a debate in my industry as to whether we call them an umbrella liability policy or a personal excess liability. And I'll just say there are technical differences, but not for this conversation.
Okay.
So when you're buying, basically what you're saying is you're buying higher limits of liability. So most of our homeowners policies will have $300,000 of liability, which would mean if someone visited your house and you were negligent and caused them to be injured, that's what that $300,000 is to pay for. The umbrella or the excess liability stacks on top of that, and then presumably goes up to a million, 3 million, or 5 million or more. Um, so the reason, if you're in a single, you have a one home, one car, and a umbrella over those two assets, and you add another car, well, of course, now you have two cars that are traveling around creating havoc in the world. And then you add your rental property, and well, your umbrella is going to reach over there and stack on top of it too. So that's a extremely common. That's how they're priced, frankly, is how many cars, how many drivers, how many homes do you have?
Yeah. And for the umbrella coverage, I'd be interested to hear your take on when do you like to see those policies get put in place for a client? Is there a certain level you're looking at where, yes, if you're at this level of, let's just call it net worth, then you definitely need it? Or, yeah, what's your take?
It's Uh, I have to pause because so I work in a private client space. So my clients are almost exclusively, it depends on how your definition, but very high net worth.
Hmm.
And so for my clients, when their kids move out, they're still targets for liability. So
Hmm.
the moment they're on their own is when they ought to be thinking about a personal umbrella of at least 1 million. Most No, all of your clients, if you're a Sound Steward client, you need an umbrella of at least 1 million, probably three, and then you'll find that going to five isn't that much more.
Okay.
So um, that's the sort of entry point, and then the question starts to become, how much do I need? I'm not a I like it as a rule of thumb. It's a good way of talking about it to say my net worth is X. I should have at least that much liability. That's true. It's not really a correlated number. Your net worth doesn't make you more risky. Being high net worth to a point does because you're spending time with people who, if you injured them on accident and you were determined to be negligent, their ability to earn income is more than average, so your risk is more than average. So that kind of thing happens. But
Hmm.
um, you should be pricing it the moment you're on your own. It's a risk, it's a cost benefit kind of thing. If you find out it's cheap enough, you just buy it right away. And then you should pay attention throughout your life, kind of where am I and what's my current exposure.
Yeah. And when you're looking at these policies and kind of seeing the makeup of the net worth, does that come into effect? If say someone's got $1 million in a 401k and they're living in a $300,000 house, like,
On the extremely high
yeah,
end, I've had clients tell me, don't worry, no one can get to my assets. I'm like, that doesn't mean they can't sue you. So
yeah,
like you still need to be able to defend yourself. But the answer is no, it doesn't really matter because the real thing you're tracking is how much bodily injury or property damage might you cause to someone else. And if you're driving on the interstate, the answer is a lot.
yeah,
And you can be negligent as a driver of a vehicle, but in a situation where it would seem like there was nothing you could do except for not be there, right? Like
hmm,
there are accidents where you're determined to be at fault and there was no way out of it.
yeah,
So just pay attention to that. But no, it doesn't matter. I've never heard anybody come up with an asset transfer protection system scheme that I think really impacts your need for liability insurance in a meaningful way.
yeah. Um, well, you got me thinking about when you're driving on the interstate, it and being aware of how much damage you cause to the person. So have you seen any cases where the damage was above the umbrella policy, right? So I have 1 million coverage and the guy got boogered up for 1.5 million. Like what happens there to your client?
No, I have not. Thank
Okay, good,
goodness, I
good.
have not. I've not
Yeah,
been party to them.
yeah.
But I will tell you, on a not quite weekly basis, maybe monthly, we have clients involved in accidents that were not their fault, that the other driver has no insurance. So that is increasingly common that they'll buy insurance just long enough to get their plates and then um, it expires and they're done.
Yeah.
So pay attention to that. You should pay attention to uninsured motorist coverage for yourself. That just means that if you have bodily injury, you're in the hospital and their insurance can't pay for it, it is some protection there. Of course, you should talk to Sound Stewardship and make sure that you have proper disability and life insurance, and and
Yes.
they'll refer you out for health insurance, I
Yep.
presume. But pay attention to those things. But yeah, yeah,
Yeah.
I've never seen anybody go through the top of their excess liability yet. But we sell. I don't have anybody that buys less than 5 million. So
Yeah. Yeah. That's good. Yeah. And I like what you said too, like, especially for adults with kids still in the home and they're driving cars, like that's a big risk there. I know we've had cases bump up, nothing materialized, but there was rumors of lawsuits and some tension back and forth, and it caused some undue stress or whatever. But it's like those are real risk out there that you need to be thinking about. It's not just you, but it's whoever else is under my roof, like how that
I have
could
this
impact you.
very vivid image from a few weeks back of Lancer Day at Shawnee Mission East, and there were maybe 20 girls in an SUV screaming as they were trying to go through the Starbucks park drive-through, and I was like, that is why teenage
Yes.
drivers are so challenging
Yes.
to insure.
Yes.
This is a not a good situation, but yes, pay attention to yeah, you have your kids, you want to make sure that they're listed, you want to make sure that they're driving. I mean, you probably ought to pay attention to the value of your car because it's
Mhm.
expensive to insure them for good reason.
Yeah. Yeah. So back on the kind of homeowners policy side of things, what are your thoughts around flood and earthquake
Good question.
insurance?
Yeah.
Is that something to have on our radar as we're, across the country, Midwest? Anything you can speak into that?
I'll address earthquake first. So there are those flood and earthquake are well, let's pause. The two most common catastrophic events that are always sort of handled in their own, like it's a separate thing. And frankly, in California, it's a separate policy. Like it's all separated because it's such a different kind of risk. So in the Midwest, it's probably worthwhile to think about the cost benefit of earthquake. I have clients in the Kansas City region that come from the camp of, you would be insane not to buy earthquake and coverage. Have you looked at the fault in St. Louis and thought about what it's going to do here? And I'm like, okay, you should have. And I have clients in Kansas City region who think it would be insane to buy earthquake insurance. Do you know how far St. Louis is? And if I knew the right answer there, I just you could buy futures and it'd be great because there'll be an
Yeah.
earthquake someday and then they'll be rich.
Yeah.
So I don't know if any individual should buy earthquake insurance, but it is generally a fact that state line matters a lot. If you're one block into Missouri, it's much more expensive than if you're one block into Kansas. So if you're on the Kansas side, it might be worth thinking about, what we have with, I guess it's movement from fracking in Oklahoma. Is that ever going to be an effect? I'm a little skeptical that you're going to have enough damage. We have enough settling of our foundations anyway that to determine you're going to have earthquake damage on a house in Kansas is tough. But that's at least the way to think about it, is to pay attention. Flood is unique in that the term flood in the general public gets used for a whole lot of things that are not technically legally flood. So if you say my basement flooded, that's a very valuable, like that's true, but that's not a flood. A flood, as my mentor Jim Palmer taught me, is a natural body of water exceeding its natural limits or surface water accumulating on one or more properties over a short period of time. So you can have a downpour of rain that builds up between your house and your neighbor's house, and a flood policy would respond to that. Or the creek that runs behind your house overflows its banks, the flood policy would respond to that. But in general, flood insurance, a misconception is that everyone wants to say I'm not in a floodplain. Well, every part of the country is a floodplain. It's just what level of risk. So if you're on the river bank and part of your foundation is in the river, that's a very high risk flood zone. And if you're, up here in Northeast Johnson County away from Brush Creek far enough, you're high, the chances of flood are very, very low. But that flood insurance is a separated policy. Your bank will require it if you're in a high risk flood zone. If your bank doesn't require it, you can still ask what would it cost, and you'll find that it's $250 to $500 a year for the primary piece. And so it's worth thinking about and pricing it out, because you might have an event that causes water to come in and cause damage that is defined as a flood. And then importantly, it's excluded from your home policy if it is defined as a flood. So that's what you need to buy.
Yeah. That's good. Yeah. On the earthquake, I remember my insurance professor, like awesome professor, but he like drilled into our heads, like, you're going to need earthquake insurance, the New Madrid fault line or whatever. I'm like, that's like one of the major things I remember from that class is like, okay. And so,
and he might be right.
He might be right. Yeah. And so good. And remind me again, you're talking about flood. This isn't a flood, but the water valve thing, that's what is that called again?
Automatic water shutoff valve.
Automatic water shutoff valve.
Yeah. And frankly, if you can't find me on the internet, you maybe ask someone to search Roper Insurance. Yeah. You'll find me. Yeah. But I'm happy. I have articles and resources, because I'll tell you why, is because I've had more than one client go out and install an automatic water shutoff valve, but it's not flow based. So I literally had one a month ago that I said in no unclear terms, send me the bid and the make and model of what you want to install. And instead, 2 days later, he sent me a picture of what he installed, and I got to explain that's $1,000 you just spent that doesn't, you still can't buy insurance. So yeah, because it wasn't flow based.
Flow based.
And if you go do a little research, you'll find flow-based is not, there's lots of them now. You just want to monitor the movement of water through your water main and shut it off if there are telltale signs of a leak.
Good. Yeah. And I know typically on the webinars, the follow-up emails, we have a list of resources or whatnot. So that'll be one, obviously, link to Roper's website there and all that, all the other helpful resources he has available through his site will be included too. Well, Roper, as we kind of wrap up here, do you have any specific advice for individuals looking to improve their coverage, or kind of what are some major tips, things to consider around? That's kind of really broad
Oh
question
no,
there.
I think it's good.
But,
You and I touched on this as we were waiting to come on to the webinar. Is um, the the market has changed in two times. So it's changed over the last 2 years. So there's advice and direction. For example, some of my clients, I'm encouraging them to take their lower value jewelry items off their collections. Because if you call me and you lost it, I'm going to tell you you can't turn it in anyway because it's so negatively affects you. So pay attention to that market change as it's a hard market currently, but also pay attention to it might have been true 25 years ago that you could find you could get some insurance broker who's well connected, who could gain you access to something that you could only get through them. That's just not the case anymore. Yeah. All of us as homeowners to all of the insurance companies today are just data points. So my advice to everyone is if you can think about it that way, and when you decide you need to go find out if you're paying the right amount for your insurance, go to market, for example, just be aware that it's a whole lot of data that you need to be able to collect about yourself and share with somebody that you trust. And if you have this inkling that, well, I don't want that person to know this information, go find somebody that you don't have that feeling about and just keep looking until you find the right person.
yeah.
So that you can give them everything and they can tell you this is what's missing and this is how we can do it. And insurance, what I do is, definitely a relationship business. You have to have a trusted relationship with someone to do it because no matter how much time you spend on it this year, you're unlikely to remember it in 3 years. So you got to trust that they're going to take care of you. But understand that it's also data and you've got to be open book to the people that you're working with.
Yeah. And it is a relationship business. How often should a client engage with you, like on an insurance review? Is that an annual thing or is that just as needed?
It's different it depends on how much you're changing.
Yeah.
When your kids are coming online and starting to drive, you would want to check in. Cars are changing a lot. We provide an annual review for our clients. We're unique in that, my clients are all over the country, so I don't spend a lot of time with them. But the key is I want to make sure I'm available for when they need me and to answer questions. And we try to set them up in a way that they have all the details they need so that when they watch the renewals come in. But I would say pay attention to your renewals and be careful not to knee-jerk reaction about the rate increases that are coming. You might want to take it out on your insurance agent, and that might be cathartic, and that's okay too. But just know that the grass might not be greener somewhere else. So I would say, maintain your relationship with the person you have. You're welcome to engage another, but pay attention to the difference between independent broker. Like if you're with an independent broker and you go to another one, what all you might have done is told the underwriter that the submission they already have is coming from another broker, which it makes them not want to. They're like, well, this probably is at 27 insurance companies and I'm not going to win it anyway, so I'm not going to spend any time on it.
Yeah.
So think through those things about how you're going to ask the insurance companies to work. You don't have to feel bad about making them do more work. That's their game, but it's not also in your best interest to just go muddy the waters and try to get a quote every year on everything because they'll stop trying about year 2.
Yeah, no, that's good. Yeah. So there is a little bit of a give and take of, yes, you want to go to market and make sure you're getting the best pricing, but at the same time, you can also overdo that too. And so,
My best example of that, I love it when clients tell me things that are true that I'm like, great, now we're on the same page. And
yeah,
he was at a retired hedge fund group and they're complaining about their insurance. And someone says, hey, I know the CFO of such and such insurance. Let's just call him. And on speakerphone, he says, stop. None of you should change or move or try to do anything with your insurance. Renew whatever you have, keep your head down, and try again next year.
yeah,
And so, like that's how hard the market is when the top guys that have all the connection, guys and gals, like you just want to be cautious about or be thoughtful about how you go to market. You
yeah,
might need to go to market because some insurance companies are literally you'll know it when the bill comes and you're like 50% rate increase. It seems like you don't want to renew me. And
yeah.
again, that's
That's their
exactly
way
what
of saying it without saying it.
right.
Yeah, yeah,
The insurance commissioner in Kansas might say you can't cancel them, but I will let you give them a 50% rate increase and then they can decide. So
yeah. Wow. Yeah. No, that's a good. Really appreciate what you shared today around knowing how the game is played and also how you interact with it. Right. That I hadn't really thought of it in that lens of how am I being perceived by the insurance company when I'm either through the claims process or through going to market and whatnot. And super helpful. Also, the automatic shut off valve, the flow. Water valve there. That's a really practical thing to be thinking about. Like you said, that's probably going to be coming online to be a required thing. So if you can get out in front of it, that might be a helpful thing there. So awesome. Well, Roper, I really appreciate you taking some time out of your day to educate us around this property and casualty space. It's in the news. Obviously we got the hurricane coming and it's going to be talked about a lot here in the short term, but it's on our minds because we've seen the premiums increase and know that we now have a better understanding of a hard market. And the forecast says that we're probably going to be in this environment for a little while, so just be aware of that. And you gave some helpful tips to navigate that well, and so thank you. I appreciate it.
thank you. It's been fun. Like I said,
Yes.
I'm appreciating the time to talk about, 30,000 feet insurance for the
Yeah.
not down in the dirt. So
Yes, yeah. And so if anyone has any specific questions, we can connect you with Roper there if you want him to look at anything for your situation there. We're always glad to connect individuals there. And so reach out if anything like that comes up.
and yeah, and do me a favor and don't. First of all, I know none of your listeners are private client, high net worth because none of my clients are either. They all think, well, that's someone else that does
Mhm.
all that. And so, what I would say is, if you have a question, please ask.
Yeah,
My insurance companies determine who I can work with, not
yeah,
me.
right.
So I really would value the questions from the Sound
Yeah,
stewardship team. Like they've been a good partner for me for a long time, and I'm genuinely happy to answer the questions. So
yeah.
send them over. Let's see what comes up, and if we can help, we will. If not, we'll tell you, who can.
Definitely. Yeah, we love that. Awesome. Well, thank you guys so much for joining us today. And stay tuned for follow up emails, some helpful resources there. And we'll see you guys on the next one. Take care. Bye.
Thank you.